broader market perspective then, the markets may have missed the Santa cheer this December, but 2014 has definitely been the year of the bulls. The Sensex has gained 28% this year alone and is the second best performing index in the whole of Asia. But will the bulls reclaim their top spot as we enter 2015? To discuss that, I'm being joined by Nikhil Srinivasan, the Chief Investment Officer at Generali Group, for this live and exclusive conversation. Nikhil, I will come to the markets and talk about your outlook for 2015, but I want to start with oil prices. That's the big headline. We're seeing US oil hovering around $55. What's your outlook for 2015 and concerns in the short term, given what we're seeing in terms of that fire playing out in Libya, which is Asia's largest crude exporting market?
Yeah, the Libya fire might have some supply disruptions, but overall the situation is such that you've got too much supply in the world and you've got slowing demand from emerging markets like China. So oil is going to remain offered. I don't see oil picking up anytime soon. I think you have some volatility in oil, but oil prices remain low, and I think it may even drop lower.
All right. What about the cues you're watching out for in terms of the currency pack? And let's start with the rupee. What's the range you're working with for 2015? And in terms of fund flows, panning out both for equity markets and especially the emerging market basket in 2015, we've seen strong debt flows in India. Do you expect that will stay going forward?
Look, the currency situation is such that the dollar is a big currency, so it's not about an emerging market crisis or anything. It's simply that the dollar has a lot of demand, and that should continue. You're going to see a strong dollar through 2015. This has an effect on emerging market currencies. If you look at the rupee in the last 6-8 months, you've lost 6-7% of value. That's a concern. However, when you look at fund flows, you've got about 40 billion this year in FII. Most of that, well, half of that from equities, half of that from debt. It's going to slow down next year, no doubt about it. Will people still be attracted to the debt markets in India? Yes, they will, but that's subject to the RBI and their policies. Now, their policies are going to be driven partly, of course, by inflation, which people talk about and is low, and that's a positive. The other issue is, of course, the currency and the trade deficit. That's not good. So when you want to watch for rate cuts in India, you've got to really watch the currency as well and what's happening on the current and trade accounts. So you'll continue to see flows. They won't be what they were in 2014.
Okay, that's an interesting point. Let's talk about India then and the Indian markets. What are you watching out for in terms of range? Do you expect that they will continue strengthening in 2015?
Yes, they probably will. I mean, there are lots of people on the show who come here and probably have much better views on the market. My view on the market is you look at 2 or 3 things. You've got to look at interest rates because everyone's watching that to see whether the RBI will cut. They will. But I don't think you're going to see massive rate cuts in 2015. And it's partly because of what I just said earlier. The currency has to be watched closely. The other things we'll watch for, of course, are reforms. The reforms would be, of course, in the banking sector, addressing the NPLs, and then infrastructure. You could watch for 10 other things. But these 2 or 3 things are going to be critical for markets in terms of prices and the index. Will you have a nice year in 2015? Probably yes. Not 2014, more like 2013. So if you take a 2, 3, 4 year of the Sensex or Nifty or whichever index you'd like to watch, you can be very, very positive. If you just look at the next 6 to 9 months, you may be a bit disappointed after the year you've had this year.
In terms of sectors that you think will hold out, for example, on reforms, you said banking is something that everyone is watching for closely. But any other themes in terms of the sectors you think will be top performers going into 2015?
Watch out for infrastructure because that's the big story. I mean, we've been laggards this year, but I think if the government gets its act together, and I think they're talking the talk, let's see how they move forward in 2015, it could be a very interesting sector because it's a sector where we really need investment. It's a sector where returns could be better. It's a sector that's underperformed.
It's interesting that you're talking about infrastructure. Of course, the government has been pushing this whole Make in India theme. We're watching out for several top brass meetings. But in terms of the government that we've had in place, you were briefly talking about reforms just now. Are you happy with the level of reforms that we've seen? Anything aside from banking that you think is going to be a major focus area, a major thrust area that the government should focus on? And how are investors really looking at India given this reform push that we've seen in the past 6 odd months that we've had this new government?
Look, you've had a very good, you've had a feel-good factor since the Modi government came in. But there's been a lot of criticism about the government not moving fast enough, just talking, a lot of rhetoric. But that's how the world works. You start with rhetoric, you create positive sentiment, and then you start on the reforms. Look, it's going to take a while. I mean, this is a mega economy. There are lots of issues that the government has to tackle. One has to be patient. I think there's a bit of impatience creeping in and saying, well, they haven't done anything yet, or they haven't done enough. Well, of course they haven't done enough. They've hardly been around for about a year. So you've got to give them time. You've got to look at the key reforms. And the key reforms I mentioned are the two I mentioned. One is the banking sector, because you've got to address the NPLs, even though that's not the end of the world if you don't address it very quickly, but that's a sign that things are moving in the right direction. Infrastructure, long-term problem. Let's have some solutions here. Again, you're not going to solve all the problems in the next 18, 24 months, but at least a step in the right direction. So my advice to market watchers is be a little more patient. I mean, these issues can't be solved in a very short time. I think the government started the right way. They're building positive sentiment. I mean, growth's going to be challenged. And one thing, I mean, you talk about the Make in India campaign. That's a great campaign, but it's not just about exporting. It's about domestic consumption. And that's the thing to watch for this year, is will domestic consumption pick up significantly? It could. That depends on interest rates. I mean, today, for example, you're paying double-digit interest rates on your housing loan or your car loan or whatever it is. Could it drop to single digits? If it does, that's massive. I mean, that's a massive boost for the stock market, for the economy, whatever. That needs the central bank to act. They will act if they think they're comfortable acting, but unfortunately, at the end of the day, it also depends on the rupee. So, it's all finely balanced. It could go in a way that becomes extremely positive extremely quickly, or it could be actually quite a quiet year in terms of central bank policies, monetary policies, but also fiscal policies. I'm not leaning any way right now. I'm sort of neutral. Neutral not because I don't see the upside, neutral because I think there's too much expectation built in to what people are expecting in 2015.